Internal Revenue Service IRS tax news. IRS sending more than 2.8 million refunds to those who already paid taxes on 2020 unemployment compensation. Now, we've gotten a lot of questions about this, so I know this is important to a lot of people. Let me recap it real quickly because it is a bit of a confusing topic. This is one of those changes that happened in 2020 that isn't expected to go forward and is different than prior years. It was also entered late, which is what's causing some of these problems as they try to take care of it retroactively here. So generally, unemployment is something that you would usually have to include in income. So if you have unemployment, normally, and there was a change to 2020, but normally you'd get a 1099, say from the state, and then that would indicate that you have to include it in income on the Form 1040. Remember, when you're thinking about taxes, income is usually bad because if you have to include it in income, then the IRS is going to take some of that income because it's an income tax. So if the IRS says you don't have to include something in income, which is in essence what they did for 2020 with regards to unemployment, or at least part of unemployment, that's usually good because if it's not on the tax return reported as income, then you're not going to be paying the income tax. It's going to be excluded for something you have to pay income taxes on. Now, there's confusion with regards to this because we've always had to include it in the past, number one, so it's a change that took place. You probably still got a 1099, and whenever you see a 1099, you're probably thinking you have to include it on the tax return, so you got to basically be able to say, okay, this 1099, there's a change to the law and whatnot, and most importantly, the IRS implemented this new law late, so that people may have already filed under the prior law, and then they had to basically retroactively go back and make the change. What results from that would be that you would think then, you'd say, okay, now they changed the law, I would like to make an amended return, because now I would benefit by not filing and including this income. I would have a higher refund or pay less taxes at that point. But then the IRS said, hey, look, since we did this retroactively and we don't want a bunch of people sending us amended returns, that would be more work for us. We would like to just fix it on our side. We're going to make the adjustment for you because we know there's a whole bunch of people that included the unemployment due to the fact that we issued this late and due to the fact that unemployment was a lot higher, in 2020 than in prior years. So they're going to try to do it on their end and then send out the refunds without you having to amend the return. Then the question is, well, where's my refund? How long is that going to take? Do I need to do anything and whatnot? And so that's basically where we're at now. Okay, so that's my interpretation of it at least. So IR 2021-123, June 4th, 2021. Washington, the Internal Revenue Service is sending more than 2.8 million refunds this week to taxpayers who paid taxes on unemployment compensation that new legislation now excludes from income. So they paid it before. It's now been excluded retroactively, and now an adjustment needs to be made. Hopefully that adjustment being made on the IRS's side without having to do anything on our side as the taxpayers. So IRS efforts to correct unemployment compensation overpayments will help most affected taxpayers avoid filing an amended tax return. So they're actually trying to say, don't file an amended tax return in the most part generally. You might even confuse the IRS if you send it. It might actually slow things up if they're trying to fix it twice. They're trying to double fix something, and that'll confuse them. And like I always say, you don't want to confuse the IRS generally because it'll take longer to do stuff unless you want them to take longer to do some particular type of thing. Don't confuse them. So in any case, so far the IRS has identified 13 million taxpayers that may be eligible for the adjustment. Some will receive refunds, which will be issued periodically, and some will have the overpayment applied to taxes due or other debts. So it looks like they're going to try to send out the payments, and they say periodically. So I'm not sure if they're going to send out one payment or they might send it in multiple payments. And they also have that same kind of thing that basically if you have other debts that you owe to the IRS and possibly elsewhere, they might keep the added refund and pay off the other debts for you instead of giving you the money. So just be aware that if you haven't received the money and you think you might owe other debts, you might want to check your balance or check the activity on your IRS website, on your account, and see it. And maybe there you can check out and see what they did, or if this has gone through, or if they applied some payment to other debt that you might owe. So you can check out your account on irs.gov possibly. So for some, there will be no change. The American Rescue Plan of 2021, the ARPA, excluded up to $10,200 in unemployment compensation per taxpayer in 2020. So the $10,200 is the maximum amount that can be excluded when calculating the taxable income. It is not the amount of the refund. So they're trying to say, hey, look, they excluded the ability or the fact that normally you have to include the unemployment compensation as income. They said you don't have to up to $10,200. So if you got up to $10,200 of unemployment, you would have had to pay taxes on it, but your taxes would be much less than that you would have paid on it, because you would only be paying according to whatever your tax bracket is. So clearly, if you only had unemployment compensation of like a couple $100s or something like that, then you're not going to get the couple $100s back. You're going to get whatever the difference would have been if calculating the taxes without including that couple $100s on the tax return. So it could have a significant impact, and it could be significant, but it's not clearly, even if your unemployment was $10,200, you're not going to get $10,200. You're going to get, whatever the impact would be if you were to remove that income from the tax return, which again will normally be kind of correlated to your tax rates, although there could be other things that are impacted, such as credits and whatnot, which can complicate the matter quite a bit. But just realize that it's the income that you're talking about. So if you want to check it, run it in your tax software on your side, reducing the income. Don't file the amended return unless you need to, because normally you don't. But you might want to double check it on your side just so you can plan and see what you would expect the IRS to do, and then see if that is indeed what the IRS comes up with, and then go from there. So earlier this month, the IRS began its programming review of tax returns filed prior to the enactment of the ARPA to identify the excludable unemployment compensation. The IRS also is making corrections for the earned income tax credit, premium tax credit, and recovery rebate credit affected by the exclusion. So these credits are kind of complicated: earned income tax, premium tax credit, and the recovery rebate credit, because they have income phase-outs and whatnot, or may have income phase-outs. And therefore, if you remove some stuff that was included in income, like unemployment compensation, it might have an impact on the earned income tax credit and these other credits, which again makes things quite more complicated than it otherwise would be. But they're saying that if in general you have these credits already on the return, they're going to try to make those adjustments on their end, again, without you having to file an amended return. But you might want to check it on your side, check it in your software, and see if the IRS comes up to the same conclusion that you think that they should come up with. But in any case, taxpayers who have qualified children and who became eligible for the EITC after the exclusion is calculated may have to file an amended return to claim any new benefits. So this is kind of the exception to the rule. So the general rule is you don't have to file an amended return. The IRS will take care of it. In fact, it looks like they don't want you to file an amended return in most cases. However, if you're in a situation where you have the earned income tax credit, it wasn't on the tax return before, in essence, but is now on the tax return, like it's something that you qualify for now after having the lower income, then that might be a situation where you have to file the tax return and amend it in order to take advantage of it. Now, normally you have 3 years to file an amended tax return. So even you might want to basically, like I say, check it on your side, file it, run it in the software, because I think you still have access to free software, see what you come up with, and then see what the IRS does. And clearly, if they're not right, if you think that they're wrong in their calculation, possibly due to this situation, that's when you might need to basically do the amendment or take action at that point. So one more time, taxpayers who have qualifying children and who became eligible for the EITC, earned income tax credit, the most complicated, confusing one there, after the exclusion is calculated, may have to file an amended tax return to claim any new benefits. Now, the only way you'd really even know if you're in that situation is if you checked it on your side with the tax software, right? And then you could see if it pops, the tax software says, hey, now you're eligible for the earned income tax credit after having removed the income related to the unemployment, then you can kind of see where it stands. So the IRS can adjust tax returns for those who are single with no children and who became eligible for the earned income tax credit. So even if you got eligible to the earned income tax credit with no children, for some reason the IRS is saying they can pick that up. But if you have the one child, that's where they're having a loophole or some kind of issue on their side. I don't know exactly why that would be, but there's that one that one issue where they're saying you might still need to amend, otherwise they're kind of taking care of it. So the IRS also can adjust tax returns where the EITC earned income tax credit was claimed and qualifying children identified. So to date, the IRS has received over 3.1 million returns, with more than 2.8 million receiving refunds. The IRS plans to issue the next set of refunds in mid-June. The review of returns and processing corrections will continue during the summer as the IRS continues to review the simplest returns and then turns more complex returns. So I think they're trying to do this to pick the low-hanging fruit first, which is probably the people that would need it most as well, kind of the more simple returns, and send those out. I also think, of course, the IRS is trying to show that they're making progress, and they do that by doing the easy ones first so they can have a lot of progress on the front end and show that. So they're going to do those, and then if you have a more complex type of situation, you might have to wait a little bit for that to take place. And again, unfortunately, it's kind of funny that the lower income returns are becoming, in some cases, some of the most complex returns because of the earned income tax credit and the refundable portion and the interplay between the unemployment and the child tax credit, which is refundable, and the earned income tax credit and whatnot. So again, you could have a lower income return and still be in a fairly complex situation these days with your taxes. But in any case, if it's more complicated, it might take the IRS a little bit longer. They're trying to get the easy stuff out first. So taxpayers will receive letters from the IRS, generally 30 days of the adjustment, informing them of what kind of adjustment was made, such as refund, payments, or IRS debt payment or payment offset for other authorized debt, and the amount of the adjustment. So once they make the adjustment, even if they take your money and apply it to something else, like they're going to say, hey, you owe the state money, or you owe us money from something else, and we're just going to take your money and pay it off some other debt that you owe, they still need to tell you. So they should give you the letter and say, hey, look, this is what we recalculated. This is what we think the balance is going to be. This is how we're issuing that payment, either to you in some kind of payments, or we're giving it to whoever we think you owe money to, such as us for some other debt, or the state, or something like that. Note that the IRS in that letter should tell you what the adjustment is, and you should be able to verify it. It's not just like, we just decided that we owe you this money and that's it. So you should be able to check it, run it in your software, check it to the numbers that the IRS kind of came up with, and see if you agree with them or not based on the law after that change has taken place.